Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint, and I'm Mathew. We've had a few strong trading days, especially from last Thursday, but the overnight handover was not so good. So we'll have to see whether that momentum will carry on. We've got a few interesting stocks to talk about, some of which were buzzing in trade yesterday. I'm joined by Rusmik Oza, who is Senior Vice President and Head of Fundamental Research at Kotak Securities. Thanks so much for joining me today, Rusmik. Good morning to you. The first stock I want to talk to you about is Bajaj Finance. And a number of companies have been coming up with their quarterly updates. Bajaj Finance is one of them. Yesterday, we saw both Tata Motors as well as HDFC trading very high and, in fact, ending at the top of the Nifty gainers because of that quarterly update. But Bajaj Finance seems to be a little bit of a more cautious update. They're saying that new loans booked in the July-September period were 45% lower than the same period last year. AUM stood at 1.37 lakh crore compared with 1.35 lakh crore a year ago. And capital adequacy, they're keeping it very high, 26.5%. They're also saying they're accelerating provisioning for COVID-19. So this is all in line with the statement that they made in the past about going a little cautious in this environment. How do you see the numbers in the context of the recent updates we've seen, like, for example, from HDFC?
Hi, good morning, Alex. The update of Bajaj Finance is in line with what earlier also they've been talking, but nonetheless, the numbers are a little tad below what we were looking for because the AUM growth is almost flattish on a year-on-year basis now. There had to be some good sequential improvement between Q1 and Q2. I think somewhere there's some missing over there, and the liquidity situation is quite strong. They've mobilized 22% growth in deposits also. The balance, cash balance, everything is very, very strong. I think maybe the environment is not very conducive. That's one of the reasons why I think they have also been a little slow on the lending side. That's why you're not seeing much growth in this. In fact, there's a degrowth in the loan disbursements over there. So overall, it's quite a muted performance, if you ask me. And going forward, I think we'll have to wait for 1 or 2 quarters to get clarity on the kind of provisioning that needs to be done. So they had warned about higher provisioning in Q1, Q2 also that's going to continue. So we'll have to just monitor for the next 1 or 2 quarters how things continue, because the number of cases of corona is still on the higher side, and that could lead to a little bit of a dampening sentiment across, and that could actually lead to a little over offtake. Nonetheless, going by whatever figures have come from automobiles and consumer durable companies, what they've been talking about, a lot of inventory has moved into the system on account of festive season. There is hope that demand could pick up and loan growth of Bajaj Finance could pick up in Q3. We have a reduced rating on the stock because valuations are a little on the higher side. So our benchmark has been around 4 times. The stock is trading at 4 times FY22 book value. So to that extent, I think so. The valuations capture most of the stock upside which had to come, and from the bottom, the stock has performed also very well. So I think there will be some kind of range bound activity in the stock, and maybe once the festival season, around the festival season, if the loan or the growth in consumer durables, automobiles, and everything is very good, I think then you can see a fresh upside in the stock. Otherwise, it's going to be a little range bound with a cap on the upside. That's what our view is.
Interesting. So that kind of captures the question that I was going to ask you, Rusmik, about whether you should enter at this stage. So since you have a reduced rating on the stock, that perhaps answers my question. I do want to ask you about the second pack, which I think has been interesting throughout because of the theme of healthcare, right? Diagnostic stocks have been in focus. Yesterday, one of the top gainers for any group of stocks was Thyrocare, in fact, gaining about 14%. And that's because of the update that they had, saying that their capacity for testing of COVID-19 has actually increased and that they're able to do much more tests. My question to you is, would you bet on this group of stocks for the long term based on the current move that they've had? And the worry, I would think, is that once this COVID-19 situation sort of eases out, will that kind of growth continue?
Yeah, So Alex, there's been a complete reversal in what the Q1 picture was for the diagnostic companies and what it is today. And just step back and give you a little bit what in Q1 what we saw is non-COVID business had gone down between 30 to 50% for all the companies. We track Dr. Labs and we track Metropolis. We don't track Thyrocare, but it gives the same color and picture for the sector. And COVID was the main driver, and it's accelerated in Q2 because earlier in the Q1 there was a phase when there were restrictions and private labs were not allowed to do testing, and then as the cases went up, they were all allowed, and they're running short of capacity in terms of doing the testing. So that business is doing very well, but I think for Thyrocare maybe and for companies like Metropolis, the realizations could improve because of the COVID testing. And for Dr. Labs, maybe it's a mixed bag because its realizations on the non-COVID side was also on the higher side earlier. So, as you rightly said, what could happen is maybe once the number of cases start dwindling down going forward, this segment of the business will go down. But at the same time, what could happen is the non-COVID business will also pick up because today a lot of people are because of fear, they don't step out, and preemptive testing and other activities are on the lower side. So maybe that activity probably could pick up once the number of cases go down and people feel quite secure in going for testing because today there's a fear factor going into a lab also. So I think maybe long-term outlook for the sector is very good. We have been very positive. Only issue with the sector is the valuations have gone through the roof.
Yes.
Just to give an example, today Dr. Labs and Metropolis both are trading at almost 50 times on a FY22 estimate, not even FY21. So in these kind of secular businesses, what we do is we use DCF valuation. And if you're using DCF, then the target price of both Dr. Labs and Metropolis is far, far lower than the current market price. So maybe one should probably wait for better entry levels. Right now, there's a little bit of euphoria which is happening, and later on maybe once this COVID testing phase goes down, stocks can correct also very sharply.
Yes.
So I think one should just stay away from the euphoria and wait for better entry levels.
That's hitting the nail on the head, Rasmik, because the last sector I want to talk to you about, a lot of people have actually, said that you must be cautious when you approach the real estate space, right? You have a situation where both the residential side in major markets and the commercial side is under pressure. Commercial, most recently because of COVID-19 and the possibility of rewriting lease agreements, perhaps some companies saying we don't need those lease agreements anymore. The question really is, yesterday we saw the entire pack gaining very handsomely in trade. And perhaps that had to do with the question of whether or not this COVID-19 situation would get eased a little bit in the coming few days. Would you bet on any of those stocks? And this has to be a slightly quick answer.
Yeah, we are selectively bullish on certain names, Alex, where it is more of residential. Like we positive on Soba, positive on Brigade. DLF is also a good play, and if someone was looking at a very high dividend yield, then NBC REIT is also good. I think it could the growth could depend more on how states try and actually incentivize more sales. Like in Maharashtra, they cut the revival in the registrations and the demand is picking up. So it will be a function of how states and the center also tries and incentivize and improves the segment. Real estate is one of the big has got a big multiplier effect, and somehow I think we need to have some impetus coming from the government side and the state governments. But outlook is selective. It's not across the board. We're not very positive on all the stocks. But yeah, on price to book on NAV basis, we find value in DLF, SOBA, and the Brigade as of now. So that's my crux answer to this.
Oh, absolutely. Thanks so much for them. Two of them, of course, buzzing in trade yesterday. Thanks so much, Rusmik, for joining me this morning. And indeed, thank you so much, dear viewer, for tuning in. I hope that this conversation helped you out. There's a lot more coming up on BloombergQuint, so do stay tuned.